The dollar is facing a revolt, and 2023 is going to be a year of great change. Now, we now have Russia taking further steps to decouple completely from the West, and they are not going to stop. The Russian finance ministry has decided to double their gold and Chinese yuan holdings. And on the surface, guys, this looks like just another de-dollarization push, but this has big implications. Now, Russia is sending a clear message that compared to the US, they trust China more to embrace the yuan in such a big way. Plus, gold is going to play a much bigger role in securing their wealth away from any new sanctions coming their way. Now, in fact, Russia has reduced their holdings of the pound sterling and the Japanese yen to zero, right? All the way down to zero. And this is a serious move. It isn't just because of the currency weakness, it's more about a move away from the West and their allies, fearing another coordinated financial sanctions on their reserves. Now, if Russia is blocked from using their pounds or yen, then their holdings are as good as monopoly money. They know that. What we are seeing is Putin trying to decouple completely from the West, and he is starting this with the Russian financial system. He doesn't want to take any chances with the West anymore, right? $300 billion of frozen funds is a big wake-up call. So Russia is going to revamp the holdings of the National Well-Being Fund. They are raising the share of the Chinese yuan to 60% and gold to 40%. They are cutting away a reliance on Western currencies and assets like US Treasuries because holding these instruments have extreme counterparty risk, at least for Russia, right? Their reserves will be sitting ducks. And even before the sanctions on Russia last February, they actually held $0 in their reserves, but now they are likely going to remove everything except for yuan and gold. If we can see back in February 2022, Russia's liquid holdings in the fund contained a ton of euros, pound sterling, and yen, but they're going to drop these assets very soon. Plus, it won't be surprising if Russia decided to move their foreign debt holdings completely to yuan-denominated bonds. Since they are going all in the Chinese yuan, it only makes sense to gain some yield in an asset that won't be sanctioned away, right? Now, what we are seeing is a complete embrace of the Chinese yuan from Russia. They have been increasing their holdings of China's currency over the past few years, but in 2022, this diversification has turned into complete reliance on the Chinese yuan. Now, the yuan now has the lion's share of Russian forex market, jumping from 1% to over 45% in less than a year. And this is going to help secure both Russia's financial security and push the Chinese yuan further out into the economy. Now, it's not a death blow to the dollar just yet, but it's yet another warning signal that this is getting louder and louder. The dollarization is accelerating. And the message from Russia is clear. We don't trust you. We don't believe our assets are safe in the Western financial system. We trust China and we trust gold more. And according to a Russian economist, the yuan is becoming the new dollar in Russia due to its growing liquidity and relatively low volatility. And let's understand how important Russia's well-being fund is. It is a lifeline that's supporting Russia's deficit as the G7 oil price cap is pushing down Russian revenues in the short term. We have Russia's finance minister Anton Sivanov stating that they could face a 2% deficit because of the price cap. So the price sanction is impacting Russia to some degree. But let's remember that the G7 oil price cap is hurting the West at the same time. Yes, the price of euros has dropped to $53 and Russia is raking in less revenue than the price cap of $60. But the global price of Brent oil has risen up from $76 to $86 after the price cap on December the 5th. We have said many times on this channel before, the oil markets will split into two. The West will be paying higher oil prices while Asian buyers like China and India, they'll be enjoying cheaper Russian crude. Russia won't sell to these countries that adopt the G7 price caps. So the G7 might have hurt Russia's oil sales, but people in the West, right, the normal people there, they will suffer from higher energy prices, right? Gas prices are going to go through the roof. And this is where Russia's well-being fund comes into play. The money there is basically Russia's emergency war chest, and they will likely be drawn down to protect the Russian economy for the next few years. Now the funds have to be secure and there's no room for any error today, especially when it comes to sanctions. So this is how the fund actually works. From 2023 to 2025, any oil and gas income that goes above 8 trillion rubles will be diverted into the well-being fund, which will then be invested into Chinese yuan and gold. Now, Russia expects to hit that benchmark if the euro stay above $60 and the production holds steady between 9 to 10 million barrels a day. And that's why, guys, we are seeing the price cap set at $60 a barrel by the G7, and why Russia is thinking of cutting production by 7%, because it's much easier to reduce your oil sales to jack up prices globally and raise your selling price to India and China as well. Now, it hurts the West, benefits the East, and helps to refill your reserves. But we have to realize that this shift to gold and yuan isn't just a one-time event. Eventually, Russian revenues will recover and more money is going to flow into this rainy day fund, right? And to Russia, there's no Western currency that is safe. So we can expect a consistent flow of money to the Chinese yuan and gold as all the years go by. And there's going to be a constant diversification out of Western assets, and Russia's other reserve fund could actually follow suit here. Now, this decoupling from Western assets is probably just the first step of something bigger. Russia and China could be planting something big with their currencies and gold. And let's quickly recall one important event that happened just a few months ago. China's now officially buying Russian gas using rubles and the yuan. Now, rubles for energy is simple enough to understand. Russia just wants to strengthen their domestic currency to control inflation. But let's focus on the yuan for energy part. And whether Putin realizes it or not, he is helping China establish a form of PetroYuan, at least for Russian energy to start. And here's a very interesting quote from Zero Hedge that holds a lot of truth. It says, as Russia buys gold with oil revenues, it attempts to create a de facto gold and yuan peg. Our point is, law follows economic practice. If enough people use something, it becomes the standard. The announcement is made after the broad acceptance, not before. Now, obviously, there's still a long way to go, and a large part will depend on Saudi Arabia and OPEC, right? If they accept yuan for Middle Eastern oil, it'll be a game changer. But with Russia stockpiling yuan and the currency being accepted for Russian energy, it sets up a precedent. It encourages countries to use the yuan to buy Russian oil instead of the traditional US dollar or euro, right? This is big because now there's an exchange window for countries to swap yuan for Russian oil that is already at a discount. It is a de-dollarization cry that encourages diversification, especially for the BRICS countries. And this decoupling is going to be watched closely by many countries out there, especially those that hold tons of US treasuries and are on the sidelines. They want to see if this Russian experiment will work or not. Can Russia survive without holding Western currencies? That's the big question. Can Russia function without the US dollar, the euro, the Japanese yen, and the pound sterling? That is the trillion-dollar question. Because if this works out, we will likely see two big countries take further moves to diversify away from the West, and that will be the game changer. Russia's just setting up the chessboard, and the first is obviously China with over $900 billion in treasuries. They have been dumping their holdings month after month because they are quite high on America's sanction list, right? I think you probably know that by now. Probably just a few steps below Russia. Now, if Russia's decoupling from the Western assets works, we could see China just accelerate their dollar dump and pile more money into gold. It'll be a win-win for them. The yuan gets stronger and gold prices rise. Now, considering China and Russia are the biggest producers of gold in the world with huge reserves in physical gold as well, their balance sheet will suddenly just jump up. And it's very likely today China has much more gold reserves than what they are letting on. And the second country to watch is Saudi Arabia and OPEC as a whole. There are a lot of things that should be worrying to MBS, and first is the oil price cap and the risk of only pricing your oil in dollars. Because when you sell in dollars, right, you'll naturally reinvest the revenue back in US treasuries. It made a lot of sense in the past, but the US has changed the game by weaponizing the dollar and all the seizures of Russia's dollar assets, right? Finance is no longer sacrosanct. It is just another economic weapon of destruction to make countries obey and play ball, right? And whether the Saudis eventually price their oil in yuan or diversify into gold will depend also if Russia can survive the decoupling. Now, the dollar system is too entrenched and the whole world depends on it, right? But if the financial fallout is manageable, then we could see the rise of new reserve currencies if OPEC breaks away from the petrodollar arrangement. Now, obviously, the West isn't going to sit back and just watch this happen. It's likely there'll be more energy sanctions coming for Russia. Now, I have no idea what else the G7 is going to pull out from their little bag of tricks, but they'll have to crush Russian energy revenues to prevent Putin from filling up his reserves with yuan and gold. Now, maybe there will be an international price cap on oil. Maybe the EU will successfully confiscate Russia's assets, or Biden will release more oil from the SPR again. Now, who knows, right? But one thing's for certain, Russia's decoupling from Western assets is just the beginning. Because if we take a look at Russia's frozen assets, we can see only physical gold on Russian soil and yuan denominated assets like cash and bonds are safe from the West. And going into the future, we will see both play a more significant role in global trade. The yuan will get more internationalized, and gold will be ultimate store of value free from sanctions. Now, obviously, this development is important for us because it tells us that there could be more dollar weakness going to the future. The big powers are trying to break free from Uncle Sam, and there aren't many alternatives for many countries away from the dollar because it still powers global trade. So even if there's a threat of sanctions, the world is still playing ball. But now, with Russia breaking away from Western assets, there is a chance of de-dollarization to progress on both fronts, right? From a global currency perspective and a store of value. So if you're a small country or you're afraid of the dollar, you can use the yuan to buy Russian oil and gas. It's now the major foreign currency Russia holds in their reserves. And if you want a store of value, you can buy gold because it's proven to be sanction proof, and Russia's going to keep pouring money into it, China as well. So gold will have a very strong bid in the market, keeping the prices higher and stronger. So guys, going to 2023, we have to watch for further signs of de-dollarization because it will affect how to ride the wave. Russia's now creating the playbook for countries wary of the West, and I won't be surprised if other countries follow suit, especially the BRICS nations. So let me know what you think in the comments below. Will Russia's move to the yuan and gold work, or is the US dollar too strong to break away from? Let me know in the comments below. Stay safe, be sure to smash the like button and subscribe as we navigate through these crazy times.